Hello everyone, and welcome to Deep Dive Stocks. My name is Justin, and today we're going to be looking at Netflix. As most know, Netflix has just experienced quite the rapid price appreciation following earnings, and I thought this might be a good time to look at Deep Dive Stocks data to see how the post-earnings price movement was anticipated, as well as look at the current data to see what we can expect from Netflix, and then moving even further, we can look at how LDPM, Deep Dive Stocks' new metric, is analyzing the situation for us in real time. So with that in mind, let's go ahead and get started. So Netflix yesterday ended the day on a pretty red note. And in fact, one of the cool things that we can do with dealer positioning is we can look to see how the market was anticipating the upcoming earnings. And here we can see that the market was actually collecting very large amounts of short delta and, as the middle graph here shows, had a pretty bearish outlook following Netflix's earnings. The cool thing, or rather more interesting thing that Deep Dive Stocks is still digging into, is that oftentimes inversing the retail market, especially when it comes to earnings, can be quite the profitable play. So here we see that the market was anticipating negative price action following earnings. So they were collecting short delta. This was piling a whole bunch of long delta onto the options dealers. And if we were to inverse the retail market, we would simply go ahead and go long on Netflix, which we see here would have been quite the profitable bet. In addition, not only did the market have a very negative outlook for Netflix's earnings, but we also see that the purchasing support was pretty significant. So combined, we have both the E3 algorithm, the earning and earnings with earnings, telling us to go long, and we have the directionalized options data telling us that the market had primed Netflix for a gamma squeeze, and a perfect storm brewed, causing a 12 to 13% rise in the price, both pre-market and it seems relatively into the trading session. So we have a situation where prior to earnings, the retail market was collecting a lot of short delta, anticipating a lot downwards price movement. This is typically correlated with positive price movement. And we had a gamma squeeze that kind of came and amplified the effects that we normally see with earnings, or that we normally see with inversing the retail market. So now that the prices shot up, the gamma squeeze is in effect, how can we monitor the situation in real time? Well, that's the benefit of LDPM, is we can look at the behavior of Netflix, the price movement, and how it correlates with liquidity and volatility to get a better gauge of what's going on. And so we have here the 4 timeframes of Netflix on TradingView, where LDPM is hosted. We have in the upper left, we have the 1 day, we have the 4 hour, we have the 1 hour, and we have the 30 minutes. And unlike most indicators, LDPM is best utilized on different intervals because it will have a different value depending on the interval that you choose. If you would like to learn more about LDPM, I do have an upcoming video coming out, but I also will link the PDF LDPM primer down in the comments below. So with the 4 intervals, we can go through each one and we can look at how LDPM is monitoring or measuring the liquidity within that specific liquidity pool. And then we can synthesize the data together to see what the overall picture of liquidity on Netflix currently is. When we move down to the smaller time frame here down into the 30 minutes, we see that the purple line, which is the overall or smoothed LDPM, is well below the price. This is surprisingly bullish. Typically, when the LDPM is below the price, you can anticipate bullish performance over the next interval, or at least until these two values cross. The difference, however, is that unfortunately, the caveat is that LDPM unfortunately is pointed up towards the price, as is LDPM granular, which is the real-time calculation, or this light green bar right here. We see that it is above LDPM, which is bearish, and it's pointed away from the price, which is also bearish. So we see on the 30-minute time frame that although things look rather bullish right now because the smoothed is below the price, because of the orientation of LDPM, we may not be all that confident that this bullishness is going to last very much longer. We move to the 1 hour, so we kind of move up in that liquidity pool, one pool up, and we see that a very similar tale is being told. LDPM smooth is below the price, LDPM granular is above the price, but we see that both are pointed, well actually LDPM granular here is pointed towards the price, which is a little bullish, but LDPM granular is again pointed towards the price. And the granular version of LDPM is you can kind of think of as the overall take on the liquidity in the environment, and the granular or this green line is kind of if the liquidity is improving or deteriorating. So we see on the 30 minutes, things don't look that good. Things are deteriorating. And that's kind of like the looking into the smaller pool or looking in more closely into the details. We see a similar situation, but maybe slightly better on the 1 hour. On the 4 hours, surprisingly, we have both LDPMs are actually below the price and moving away from the stock's price movement. So as the stock price is appreciating, LDPM is moving downwards. This is pretty surprising because this is a pretty strong bullish indication. We see an even more exaggerated form of this on the 1 day, where LDPM granular is moving significantly below the price, while LDPM smooth is already below the price and moving further away from as well. So we do have a rather strange situation here where on the larger time frames, the 1 day to 4 hours, we have improving liquidity. But then on these smaller pools, it looks like we have a little bit of a mix down here, in the 30 minutes, in the 1 hour. So the actionable steps here is, well, it depends on your trade time frame. If you're trading more longer time frames, maybe the day or the week, the 1 day and the 4 hours are giving you some pretty strong bullish indications that even in the near term, should the price collapse a little bit, there's a reasonable expectation that the price should continue to rise. However, if you were a more short-term player, maybe down to the day or only a few days, then the 1 hour or 30 minutes, especially if you're like a day trader, may be more potent to you in that it seems like on the near term in this environment, liquidity is not improving. It's actually slightly getting worse. This means that, well, we got to keep an eye on this, right? Giving myself a award for obvious statements. But it definitely isn't the type of behavior I would expect from a stock that has shot up 12%. And most likely probably not the people who voted here that the price was going to fall as soon as the market opened. Today's trading is probably not going well for them as well. The beauty is that we can also see the distance. One of the cool things about LDPM is the distance between the value and the price is an indicator of how the future volatility we can expect on the stock. And with quite the distance between LDPM and price, we can see that there is quite an expectation for some pretty exaggerated moves in the future. It's also curious to keep in mind that gamma squeezes are notorious for increasing liquidity. They provide what's called artificial liquidity. And typically this is measured through IV or implied volatility, but I would speculate, and I think I'm going to put forward, that we can see this pseudo liquidity or the artificial liquidity that these options dealers are providing here in the LDPM metric. You would probably be hard pressed to find a stock that has increased 12% and has good LDPM, liquidity, and volatility indications. Unless, of course, that stock isn't a gamma squeeze, like Netflix. So that is a quick review of both Netflix's data and LDPM and how we can monitor the progression throughout the day. For instance, curiously, we see that the price. So if I was just ad-libbing here, if I was trading Netflix on say today or the next few days, I'd be particularly interested here to see if the price starts to rise above this LDPM granular, this green line. Once both LDPMs are below the price, especially if we see that happen on the 30 minutes and then we see it progress to the 1 hour, and I was long on Netflix, I would be reasonably confident that I could probably ignore the position for a while and just let the long gains flow. If I was short on Netflix, I would find this a very precarious situation, as the only way that on these shorter time frames I could develop a bearish or a full bearish outlook is if the price falls all the way down to the granular, which is at 256.26 right now. And then both LDPMs would be above the price, which would give me that bearish outlook. So for now, we'll monitor. We'll keep an eye on the 30 minutes to see how the price interacts with the liquidity at this level and see if it flows up or if more liquidity gets drained down. That's all I have for you guys today. Happy trading, and I'll see you guys next time. Bye.